What's up, everybody? Good morning. Welcome to that stream. YouTube, friends, and then Zoom. Ooh. What's up, you guys? Getting everything on Zoom. Oh, I wasn't talking. That's why. Man, I'm starting to look at my hair. I need a haircut. I'm starting to get a little shaggy. What's up, you guys? Time to wake up. Y'all ready? Y'all ready for this? Good morning to us. All right, let's get our calendar out and see what we got going on today. Ooh. Nothing today. Nothing tomorrow. Really light week this week. We have VIX expiration tomorrow, so that's gonna be a thing. Monthly expiration on Friday. Thursday is the big news day. Retail sales, continuing jobless claims, initial jobless claims. Looks like the crude oil inventory was pushed to Thursday because of the holiday. Usually Wednesday mornings. And Friday, get the housing start. So Thursday, Friday gonna be a pretty busy-ish week. Do we do every single morning at this time? Wake up, get our dynamics on the chart. I think I did this last night though. 58.90 right there. 58.56 here. 56. 58.02. Wait a minute. 59.05. Yep. Already did it. Okay. So already out the door. You guys know how this rolls. What's up? What's up, Zoom? Let's go. It's good morning. Don't forget. All right, market open here. Let's see what we got. We have first thing you do is you make sure you get your pivots right here, and here, looking good. Here looking good. We're in the middle. DD bands looking great. Okay, so that's good for a dip. Let's go straight to Nasdaq. Just review that really quick. Nasdaq's sitting really pretty right here. MHP, same setup. Your liquidity map up here. What's up, you guys? Sorry about that. We're back. Don't go anywhere. All right, here. We go over the 4 major things we're going to do for really quickly for identifying and understanding durable market. All right, so here we go. Liquidity mapping reversion. First thing you do is you open your tool on the side here. It'll show you where that liquidity is in the market. So right here, the liquidity is in the middle. Resilience greater than 0, so we're clearly likely to support this way. DD ratio greater than half. It's likely to go here if you have to choose a direction. So today's setup, any tap right here is a long up to there. This is the setup for today. From here to here. Or to bet on anything, we bet on the break rather than bet on the sell-off. We buy the bounce instead of short the high. That's how that goes every time. Super simple. One, two, you don't have to look at me. Yeah, so if like, okay, so those of you that are just tuning in here on YouTube, we have a huge community. We're all in Zoom right now, but we do a delayed stream on YouTube as well. Like the real time, head over to the description below. You can get access to our Zoom stuff. The liquidity pocket on QQQ. This is the one problem with Q. So the S&P, we have a little bit of downside for any upside today. Different than yesterday. Rare to break through here. Let Q's raw. There we go. Rare. This is support. Support from here. The halfway point between here and here. We all know this. This is my favorite trade. Favorite. No shorting from here, though. There's no short setup for me. Favorite. Let it dip. Tap it. Rare to break. Whereas less than 0 on Nasdaq, it's likely to pull back a little tiny bit. Rare to break in bull zone from here. VIX liquidity map is also downside, so it's pretty solid here. Rare to break in. Top of bear zone is always typically a short setup. Back down to bottom. So it would be rare to break through here. My call for today's path is down before up. So here. That. It's rare to break into bear zone and keep going. Yep, calling tops is such a fool's errand. No shorting. Let it do its thing. Just gonna wait on it. Rare to break through. Wait for the setup. It'll be rare to break through. Well, that's a huge pop in a liquidity pocket. That's rare. Rare setup. We'll chase that bull trap, guys. Or y'all do whatever y'all want. I don't care what y'all do. I'm not chasing the bull trap. Look that. Look that. That's this rare shit pull back. Just watch it. Just watch it. Just watch it. What's up, Pepcos? What up? Res resource yesterday into the same thing. Yeah, let's check the alerts here. So when these numbers are... Yeah. Oh, by the way, I need to make a note. All right, let's go. Come on. It's the rare to break through. Bull trap, not gonna touch it. But the bet normally on a hedge break is to bet high, but there is really nothing to go against. At 498 is a really solid resistance, so be careful on that, you guys. All right, let's look at IWM. A bull trap in the liquidity pocket. The market doesn't have much. So you have a little bit of a bounce right there on Russell. Russell's trying MHP bounce. We know that that's usually a play. Question is, do I want to risk a little bit of this? You could hit bulls on bottom, bears on bottom. Let's take one setup again. Eval only, not taking any real risk on this. I'm going to put it with my funded accounts at the bottom, hit the bull zone, just at the bottom. That's it. There's no long setup from here. Don't short. Dear God. But there's a risky play. I'm here to here. Risky play. Risky play. I don't normally short in the bull zone. I don't normally take this leg, but We're gonna entertain the viewers. So small positions, small, teeny weeny. Eval only, no real. Here, down to here, that's it. That's the move. And it's right back up. Normally, I will bet every single time on a hedge break to take the long setup every time, except we have bear zone resistance there. You guys, welcome to the Rock Scooter. Good morning, welcome to the stream. Live trading every morning. Don't forget over there in Zoom. Hit that. Go to YouTube real quick and hit that like button. Give us some love really quick. Nasdaq resilience greater than 0, so there's going to be a little bit of resistance on the way down. There's not going to be a quick path to the downside. There's going to be a little bit of like, little bounce right there. Want to learn how to do what we do here. Calling out the market like we do. Drawing on your screen like we do. We teach you guys how to do this. Using our tools. We teach you how to make trade plans just like this. Draw on your screen. Here. Here you guys know the rule. Halfway point between 498 and 496 goes right to 497. That's a trade. First on the shoulders, baby. Ooh. Again, risky short, but bear zone top, I like to short. I scare myself out of it if the DD ratio is greater than half, but I tap it with a small position. This wasn't short off a hedge pressure. This was short off a bear zone. Again, I don't advise. This is it's not the most probable trade to take. That's why I only tapped it with something small. Why it's a bull trap? Because it's breaking a bull run up in a bear zone. There's that first little green, this little green arrow right here. It's going to be a little bit of a bounce. Nasdaq resilience now negative. Let's go ahead and delete this really quick. This is going to fall quicker than I thought. This number is negative. We're likely to pull back lower. Bull zone coming up. Let's go. Let's hit it. Because you don't, it's rare to break into bear zone. Kind of look at you right here. Just rare. Keep going. There's a little green arrow I did draw. I just deleted it, but resilience is going to fight through here. But we're less than 0, so it's going to have a hard time bouncing. S&P is still decent, so the S&P is going to be what's pulling the market up, the S&P stocks. So you don't, when you open inside of a pocket, like here, it's rare that you break and keep going. Like if you're in bull zone, it's rare to go to bear zone and keep going. It's ultra rare. It's like less than 10% of the time under ideal conditions. Doesn't happen. Makes sense, Pepkos? It's trying to break into bear territory right here. Now, I could be wrong on this move down, but the ideal setup is to, for me, 496, 497 is the easy scalp to take for the day. The S&P, as an example, is like stuck in the middle. Again, this market's very bullish. There are the 4 signs of what a bull market actually is. I mean, okay, ready? 4 tools, all you need. 4 tools. Number 1, this ratio that I'm circling at the top, greater than half. This is it. The 4 things you need for a bull market. We give you all of them. To know for a greater market, is the market bullish? Is the market bearish? We give you all these tools that will tell you. Number 1, this ratio greater than half. Means the majority of stocks, market cap in the S&P, is in what we call a bull zone. It's bullish. Bull zone means there are more longs against the dealers than there are shorts against the dealers. Dealers are balanced and hedged to provide more shares to the long side. So stocks are bullish, number 1. Number 2, the hedge pressure on SPY. If you're greater than that, you have monthly gamma that's bullish on SPY itself. Check. We are above this. Check. Okay. Easy peasy. VIX futures less than the continuum midpoint, which is a whole thing that predicts that the VVIX is going to go up or not. This is a predicting. This right here is worth the membership alone. Learn about that. We're not there right now. This is the one caution. What that means is that the bull market is going to have choppiness on the way up. We're not there now. We roll into new VIX futures contract on tomorrow morning. Or tomorrow, it starts tonight, which is tomorrow morning, as VIX monthly options expire tomorrow. And number 4, monthly maps, which predicts, or actually not predicts, it just shows you, reveals the forecast of the risk distribution of dealers over time. Monthly map on SPY. Let's load it up. This market's trying to bounce. We'll see what happens here. QQ monthly maps. Here, definitely bullish. Bull side getting stronger, bear side getting weaker. So there you go. QQ bullish on the long haul. Buy bearish and bullish on the long haul. So you're looking at the bottom of these gray boxes and the top of these light gray boxes. When they both slope down, it's a short squeeze. Market's gonna go higher for farther. So we have 1, 2, 3 of the 4 signs are great. The 4th one is a caution, which means it's going to be choppy on the way up. That's it. 4th one's not a bear caution. The 4th one is a how it gets there caution. All right, that's it. So again, you're not expecting the market to tank today. Signs are looking pretty decent. Hold. If it does sell, it's going to have to fight its way down like we drew today. See how I drew this little kind of upward swing right there. The resilience is pushing it higher. Buy's doing the same thing. As I can remember, it's rare to break through. Doesn't mean it can't. It's rare. Rare is this, in this particular setup, less than 10% chance that it breaks through what says rare. It's a higher probability that we stay below 498 today on Qs. With the way the setups are, according to our backtest, roughly 90%. 90% that we stay below here. That's why it's a bull trap. Does that make sense, Puffcoast and Zoom? Friends on YouTube, don't forget, hit that like button. Give us some love. Nasdaq's still gonna fight. See how it's fighting now. I'm not super happy or eager about this setup. It's not gonna fall fast. It's still fighting because that resilience number is just bullish enough to hold the fort. See how it's trying to fight its way lower. You have to see which one wins, and unfortunately, this is the stronger indicator. The bear zone resistance is the stronger indicator than this one. So when you're betting, it's always strength. This is stronger. Stronger. That resistance is stronger. And that support. We teach this. Questions, you guys? It's just the probability. No matter what it does, the probability is in the 90th percentile that we end up down in here, that we close below 498. All the lights are green. It's rational. 90% chance below. These are actual stats. We have some setups that are 90% plus. They're ideal conditions, no irrational, no catalyst, no DD band break. It's about 98%. 90% chance below 498, baby, by the end of the day. My favorite setups is bull zone bottom, bear zone top. Bear zone top, always a short. If you have confidence, short it heavy. If you don't, short it low. I shorted it small just because I don't have the confidence. This is, some of these are bullish indicators, so I don't have a lot of confidence on this one. I have some. See how it's the stronger resistance is winning? You guys having fun here on YouTube? Love you guys. SPY's fighting really hard to bounce, and that again, it's gonna have a hard time selling. The S&P is providing strength here. It's gonna have a really hard time selling. Trust me. It's not gonna easily fall. It's trying to. It's gonna have a hard time selling. It's fighting this all day long. Markets, remember, we talked about this. Market does not want to sell off at all. Market wants to be strong. It's got to fight its way lower. See, it's bouncing all over the place. Not a bear market. Even now. All right. Did you guys have fun yesterday's class? YouTube? Zoom? Did you have fun yesterday? Did you learn a lot? We taught you something. Now again, we have this webinar series. It's starting to become famous in our circles. We've had 500 people take it already. We started it 2 months ago. We're redoing it now, so get in on the second time. We're revisiting from start to finish. We're doing it all over again. I will teach you 100 things you didn't know about the market. I'll teach you something right now you didn't know about the market. Can I share something with you guys? If you want to learn the statistics of the stock market, I've compiled everything for you. This is my secret stuff that I've always used over time, and I'm sharing it with everybody. Here's a free one. Here's a freebie. I'll give you one for free. Oh, Laurent, bro, that's awesome. You set that up for everybody. I'm looking at the Zoom call. That's cool, dude. Very cool little graphic you made from yesterday's setup. All right, check this out. You guys ready for something? I'm going to teach you something that you didn't know to show you that this is worth your time. Let's fucking go. Let's fucking go. Let's go lower. Let's go. Let's go. Illiquidity pocket hates the fucking middle. Go. Keep going. VIX is... You want VIX less than triple B for a bull zone. You want it less. Come on. Come on. Keep selling. Keep selling. The S&P resilience is getting a nice little bouncer here, though. It's going to have a hard time breaking. Come on. Pull back. All right. You ready? Let me show you something you didn't know. Hold on. I hate whenever I start teaching and the trade goes crazy. Come on. Keep moving. Keep moving. Like I said, it's going to be a fight. It's not going to fall quick. It's going to be a fight. Dumb market is dumb. See how crazy that fight is? Strong bear resistance does not want to sell off, though, because the stocks themselves are gap and go. So you have right now the index. The index is fighting. Index is pressure to the downside while the stocks are being bought up on the dip. You see that? Okay, ready? Ready? In these classes, I'll prove to you that you want to wake up every day asking yourself, how can I be a bull today? Never wake up and say, I think the market's gone too high. I think it's going to sell off. You wake up every day, I don't care how high it is, asking yourself, how can I be a bull today? We proved this. We proved that the market is sustainably bullish at all times. There's a whole bunch of reasons for it. These are your stats, okay? On my screen, in front of your very eyes, this is one of 100 things we'll teach you in this 20 days probability mindset, which basically states, if you can last 20 days in the market, 20 days, You've kept half of your account, and you do that every month. You lose half your account, lose half your account, lose half your account. You just randomly long the market. Over time, statistically, you have the edge to make money. 401k does this because of these stats, and these are great stats. So basically, just don't blow up your account by betting too big. And we teach you how to bet the right size. I'm betting small because I have resistances fighting each other. My certainty is low. I know it's going to be a fight on the way down. I've described this exact behavior all morning. I nailed every piece of this. I'm still not saying, ooh, it's going to sell off. Let me short this. I'm like, it's going to fight its way down. It's rare to break through. It's trying to break through, and it might break through. The rare case might take over. 10% chance. How do we know this? Well, everything we do is stats. So, did you know, on the monthly scale, over the last 100 months, 70% of months were green. Easy to see that. 30% of months were red. Now, of these stats, 56, let's start over. 14% of all the months total were a green month that lost a third by the end of the month. Only 14%. 56% of green months were strong until the end. Didn't lose a third. Didn't sell off a third of that month worth of gains. See, look at this. Just bouncing all over the place. Now again, that's why I'm saying you want to wake up now wanting to try to short a market. The rare stuff is trying to happen right here. So 56% of months are green and strong until the end. Oh, there goes the rare thing. Boo. You're crazy, right? Nope. No, lost the break. Cut that out. So, when the rare thing happens, I get out of the way. Isn't that crazy? Doesn't want to be up there. It's rare to break. Keep going. Does not like that. All right, so back to it. Only 3 out of 10 months are red. But the thing is that when you look at it, 70% of months are green or strong and green. And very few of them will sell off a third. Red months, there's only 30% of months are red. And 18% of the red months, or 18% of months will recover a third at the bottom. So when you do the math, right? Let me show you the math. Let me do that math really quick for you. This is worth every moment. So of the 70 green months, only 20% of them sold a third. So if it's a green month, 80% of it's going to be long and strong. So you're talking, 14 over 56, et cetera, et cetera. 32 over 56. Of the red months, 60% of the red months recover a third. So red months have wicks at the bottom. That's a stat. Like, if you have half your count by the end of the month, you're going to recover some of your losses at the end of the month. Bull markets stay strong. Bear markets recover. A lot of the selling just recovers by the end of the month. So it's a great stat to know in your back pocket that 70% of months are green and the majority of them are strong and green. So, you're better off just being long as much as you can. And the stronger strategy. And being bearish is knowing that bear markets, especially bear months, are short-lived. Even in the COVIDs, even in all the worst case stuff. Like this is COVID right here. Even COVID, 3 months of selling in every single month has that end of month effect where you recover a third of it, right? So the idea is that probabilistically, you have stats to give you an edge. Shorting should be very obvious, right? It shouldn't be like, I think it's too high, markets are going to come down. Markets are high right now. I'm saying, how do I get in on the dip? I'm getting in on the dip right here. This is my ideal dip to buy on. I always look for dips to buy. I never look for market to sell off and crash. You on the same page, you guys? See, it's rare to break up there. Bull traps all day long. Stat number 2. Ready? When you actually finish all that math, you'll state that when you add 56 and 18, which means a bull market that stays bullish, or a bear market that recovers a third. See, remember, this one is one that sells off at the end of the month. This one is one that sells off at the end of the month. These two are markets that rally in the last week of the month. So 74% of all months rally in the last week of the month. 3 out of 4 months rally the last week of the month. Literally the last week. The calendar month. Like, this is the last week leading up to Halloween. 14 plus 12 is 26% of months sell off at the end of the month. Sell into the end. So when you guys used to think like, oh, you guys know the Thanksgiving rally, the Black Friday rally, the Christmas rally, like all these different seasonality things. Specifically, they're just because those holidays are at the end of the month. There's an end of the month mechanic because funds and firms are repositioning on a month to month and quarter to quarter basis because they report monthly and report quarterly. The end of the month is a thing for them to rebalance, window dressing, they call it, to put things on their books to say, oh, we had it this month. Oh, yeah, we had NVIDIA all month, and they buy it on the last day, right? Called window dressing. So the idea is that the month to month, the calendar month actually is a physical effect. What it means is because the market has rallied into the month of October, your thought isn't it's going to sell off because it's rallied. It's at the high. It's got to sell off. Did I watch Twitter today? All these furious buying puts trying to sell off this market for the only mechanic of why would I buy calls at the high? But as the market has gone up, every single one of these months was the fucking high as it continued to go up. It's silly to think because it went up, it must come down. And what we teach you in this 20 days probability, these are 2 things I taught you. I will teach you 100 things total. It's literally only $20 to go through the 20 classes. We had like 500 people take it the first round. It was crazy. And now we're doing second round. Class 1 started yesterday. We go only on stats. Everything we do is stats, man. We give you the numbers, we give you the little blueprints, and that's it. That's the stats. It's not made up. It's just statistics. So when you're trading, you need to understand there's statistics on what you need to do. Hold on one second. I don't wake up and say, market's too high, I'm going to short it. Only shorting will be obvious. That's what the first thing said. You'll have a resistance if you do short. Every day I wake up and I say, how can it be a bull today? Because 75% of the months, and then we have stats for weeklies, dailies, everything. We give you all the stats. A short setup will be so obvious you can't miss it. It's not like, oh, the market's kind of high, maybe I'll short it. It's never a maybe. If it's maybe I'm shorting it, maybe you're a moron. No offense. I love you guys, but maybe you're a moron. Oh, it's too high, I got to short. Well, it's double topped, I'm going to short. You know, as the market continues to rally, it's always double topping. Here, market's at highs. Okay. Boom, double top, keep going. Market keeps going, keeps going, keeps going. Each time, double top. Double top. It's like, there's no magic to like it hit the previous high. It's got to sell off. 75% of the time, it's going to blast through and keep going. So when we trade, it's like counting cards like you do in Vegas. You're not, the edge is in the probabilities. You bet on the edge. The reason casinos make all this money because there's the 0 double 0 on a roulette. They get a slight edge over 50%. This is your slight edge. to understand that there's probabilities that you can physically bet on. I don't wake up and say, oh man, this is the day, this is the high. I'm gonna buy puts today. This is the day. This market's, I wake up and say, man. See, the reason I took a short setup is because it's bumping into really solid, high probability bear resistance. And like I said, you can see how I'm not wrong, because all day today, it's trying to resist my bear resistance. That's how strong that resistance is. But the bull market is very strong on top of that. So it's a fight. The market is very bullish, very bullish. It's not going to sell off easily. So the idea is you have a 90% resistance probability fighting an overwhelmingly strong bull market. Y'all see that? If I go on CNBC, somebody said on Zoom, go on to CNBC and try to say that, they'll kick you out. They wouldn't have anything to report on. Yeah. You see how it's fighting to not break through here. It's rare to break through there. So eventually the bull market might actually win. But it's just rare to break through that. And if it does, it does. But the ideal setup, the ideal long is right here. Ideal long, right here. Like when I call it today, get out of the way, go home, do my thing. Is to just wait. If it continues to trickle up, oh well, there is mountains of resistance here. Ultra rare would be to break this and keep going. The ideal long is to wait, let the market like fight this off, and then if it sells, then it sells. Okay, let that happen, right? And then I wake up and go, oh, there we go. Ideal long. So what I do is I don't like, while it's fighting in here, I'll usually put a small position on it. Nasdaq resilience less than 0. It's let me retry. Let me be a maverick one more time. Again, eval only. I don't go try to short the markets with the funded accounts. Nvidia broke MHP in a bull zone. Would it be good to pick up some shares at the bottom bull zone when MHP is broken? Nvidia. So you know the rules, right? Whenever you have an irrational signal, you lose faith. So you lose like one. We call it a -1, +1. We teach you like counting cards, right? MHP break, irrational. So whatever you would do here, if it's a normal, you'd step it to a medium. If it's a medium, you step it to a small, right? So irrational markets, you trade smaller because the market can be a little more violent, right? So whatever you normally do, you'd risk it. Because somebody asked me in Zoom, say Nvidia broke here. They want to buy bull zone bottom. They asked me what I would do. So if I normally was going to long this with like a heavy hand, like normal, down here I'd hit it with a medium because it's irrational. Or maybe even small. Something smaller. Question. Here it's reminding me about UVXY. VIX has some downward pressure today. A very bullish market. Yada, 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 yada. Let's delete all this. Oops, I don't want to delete all of that. Okay. Even under non-ideal conditions, it's still a 60 to 70% chance that you close in that same zone you opened in. The zone here is bottom of bull zone, top of bear. The zone is here. But since we're fully like stable here, probability is high. Market's a little more predictable today. You get that fight here. We keep talking about this one. See how there's a fight. Ideal long at the bottom. So what we do is we predict flow and volume flow based on options data. We use this for futures. I'm a futures trader. And if you guys like what you see, check out the description below. A lot of cool stuff for y'all. Oh, shoot. I need to go marketplace. So no, there's no catalyst or events coming up. Like basically, we're pretty solid until Thursday. We'll have VIX expiration mechanics today. It's gonna be one of the moving parts of the market. VIX monthly options expire tomorrow. We'll change this over here. How we doing? Oh, we're doing good. Bear traps all day long. There's the rare. Okay, we teach you guys this all the time. Liquidity map, by the way, is getting an overhaul. If you guys have not joined the new Pro Plus on the new site, this is getting an overhaul. We're removing some, adding some. We completely revamped our strategy to only focus on the higher probability ones. We give options for different paths, but as we have now years of backtest data to kind of go with it, we've reframed everything to just be the highest probability setups, right? This is the highest probability setup right here. Bear zone resistance is really strong. Really, really, really strong. S&P, let's watch S&P today because that's going to be like the controlling factor. S&P bottom liquidity pocket. So typically in liquidity pocket, this usually bounces. Okay. Nasdaq in an illiquidity pocket is likely to fall faster. This is usually a bounce point on the S&P. By proxy, let me go ahead and take profit on all this. There you go, done. That's pretty solid. Yep, S&P falling to hedge pressure. Good, good, good. We're gonna keep falling. Good. Close out early on this Nasdaq here. Get lower. Get low. This is not 497 is not a bounce point. 496 is the bounce point. The S&P is trying to bounce right here because it's in a liquidity pocket. This is another bull trap. This is not a buy the dip. Nasdaq itself, support at 496. It's going to keep coming down. I'll let you. Come on. Come on. Come on. Come on. Give me some love. Come on. Come on. It's going lower. It's going lower. We'll teach you everything you need to know. 66% off first month of our trading platform with our tools. All right there. You guys can have full access to it. Come on, keep going. Bulls on bottom. Bulls on bottom. That's the tap point right here. Right here. You guys like that bull trap? I said all morning. That's it. That's it. Every bear in the world is going to try to jump in right now. And nope, 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 nope. SP has a little bit farther to go on hedge pressure right here at the bottom. Rare to break through the S&P on bear side. 583.5. This is the rare case. How'd I do, guys? How'd I do? Again. All right. All right. Elite Trader Funding had a sale. By the way, they're like 80% off right now, right? 80-something% off. Elite Trader Funding's had a crazy sale, which is great. Oh dear God. Oops. Wait, come on. What's going on here? Where's my QQQ? Come on, come on, come on, come on. I fucked up, guys. I fucked up. I fucked up. I accidentally shorted in the funded accounts. I thought I was just killing a bunch of evals, but whatever. I accidentally made $4,100. Motherfucker, I don't want to short that shit. I need to organize my shit better on my other screen. My other screen is where I have all my DOMs sitting there, and I have my evals on one side and the fundeds on the other. Damn it. Fuck shit. No, it's stupid. I said I wasn't shorting eval only. Dude, like I say, I fat finger. No, I don't give myself credit for an unintended fat finger win by pushing the wrong. I accidentally made $4,100. Okay, so with trader funding programs, whenever they are solid, like deals, load them up, stock them up. These are static. These are statics. $20 a pop. I just stock them up. I was juggling 3 funded accounts and then like trying to build up my other 20 evals, and then they just had the sale, so I was just doing it. I bought 20. So that was yeah. That's another eval. You guys can see that? Here we go. Here's our Zoom call today. Let's see what you guys are saying. Oops, I made money. Lucas, pass on the eval. Love Rocks here. Matt, need to buy you some beers. Bro, come on out. Friends on YouTube, don't forget to sub to the channel. Don't forget. Sub to the channel. Give us some love. We teach you how to do this. We created these tools. We invented this process. There are people out there now. Gamma exposure and all that is now a hot topic. We were the pioneers of that field. One of the pioneers early. There's a couple of retail programs that came out that were pioneering that field around the same time we came out. We've been here since 2016. Why is my QQQ candles not showing up? MHP break on Nasdaq. Be very careful today on this. MHP breaks can be pretty brutal. I don't know if I want to buy Bear Zone. Okay, so I've talked myself out of buying Bear Zone today, guys. I've talked myself out of buying Bear Zone today because we've broken MHP. Okay, so no, or Bull Zone. Sorry, no Bull Zone buy on me. Not doing it. Not doing it because QQQ broke. I need a confirmation. QQQ broke. When we're above 2582. So today, you guys know I need a confirmation of being back above here to take that long. So I'm not buying because of here. No buy zone. Okay, I guess I'm the drill there. How much importance the night MHE? It's just as important. Because that is the MHP on futures. We have MHP on equities. We have MHP on futures. They're confluent. We use them both. So the problem that we have here, MHP baby, MHP on Nasdaq. So we have two things together. This is on my other screen, but you guys know that, right? I'm not gonna buy on hedge pressure break. Market's irrational at this point. Yeah, so MHP is 2410. Did I draw it in the wrong spot? Wait a minute. Let me double check that. No, you need to scroll down. Simon, you gotta scroll down in the chat. MHP NQ futures. Futures has its own hedge pressure. Simon, scroll down in the chat. You're missing. You're looking at yesterday's. You see this? See that? Not buying Bull Zone. I'm not buying Bull Zone. Not buying Bull Zone. Are y'all having fun here? No longer the ideal long. I need the confirmation now. I need the bounce. Bounce. The scalp trade only to here. That's it. That's it. I need the confirmation and bounce, and I'll be willing to long there right up to. It's only to 497 though. Halfway point. Having a lot of fun. So MHP break on Nasdaq futures. VIX monthly hedge pressure break 2625 UVXY. Gonna cause additional volatility. This is no long here. Not gonna take it. Simon. Here, for you, dude. Right here. This, you don't, not MHP. Don't convert. It's this. The bot posts this every single night. And actually, I'm going to relabel these. These need to be actually NQ and ES and stuff. These are the hedge pressure dynamics that last all day for futures. These are the futures numbers. So while you can convert the equities numbers, like I said, there are people here that take the equities numbers and convert them to futures and put them on the same chart. Put the equities by itself, the futures by itself, and put them side by side. Do it the way that I do it. It'll be easier. Yeah. So they're both important. The problem is the converted number for equities like dances around a little bit, right? The futures one is like, that's it. So by proxy, it's pretty much right. It's exactly like right here-ish. Because we lost the futures one, I'm no longer buying the equities one. So as you see, it's no longer ideal trade here. So I'm not buying. I'm not longing. At bull zone. Because MHP break, it's irrational, and I usually sit out in MHP breaks. Normally, we chase MHP breaks, right? And the only reason I didn't chase it is because there's a bull zone in the way. So the market is now chop city right here. If there was like 10, 20, 30 points, the S&P or, 100 points in Nasdaq, I might have chased that orange break, but too small. So today's ideal trade is if you take the risk here, or if I take the risk here, I have a stop like so. It's a small trade, if anything, but a bounce that supports here is back up to there. Remember, we are staying below 498 90% of the time. Under these conditions, it's about, Garrett will know the numbers, roughly 60 to 70% now because of a hedge break. You say here. It's only about 60%, give or take. Garrett, do you know the exact number for MHP break only? And we're going to include Nasdaq, by the way, futures. So Simon, yeah, you can convert MHP Qs to like MHP, Nasdaq, and back and forth futures. But you really want to look at both of them side by side together. Like the equities chart's not going to have the futures numbers on it, but I'm watching them at the same time. Pivot points based on gamma exposure, some of them are. So, but the thing is that we take the options and all the options trades that take place in the S&P. God, now the bot's going crazy. Hold on. All right, the bot's going crazy posting on. So what we do that's different than gamma exposure, typical gamma exposure models, what they do is they will look at the total open interest and they make a heat map of just the gamma of the total open interest, which is completely wrong. It's not actionable. And some of the earlier pioneers, earlier than us, that started working on gamma exposure, created gamma exposure models. And while they're cute and look good on paper, they're entirely not actionable because you can't act like every single option will have gamma induced hedging. So, and you bought, what if you bought QQQ 600 calls that expired today? There's nobody hedging. No matter if you bought 1 million of those things, there's nobody hedging it. This is so far out of the money, it's not going to have any effect on it. Yet, you bought 1 million of those things. Therefore, the heat map is shifted that model to like be really close to your thing. Example, gamma exposure model just takes, it's literally, it teach you how spot gamma and GEX and all these things work. You literally go take the open interest. You can get it from Thinkorswim. Put in an Excel spreadsheet. Multiply by the gamma. Okay, you're welcome. Go save $500 a month. Seriously, if you use gamma exposure services, I'll teach you how to make that stuff for free. You just make it for free. And it's useless stuff. It's not actionable. It's good knowledge to have. But here's how it works. You have a grid of all prices, right? You have open interest at each strike, and you multiply by the gamma, and you're going to get this like heat map, okay? It's going to be like all over the place. You might have some congestion in some places, but it just kind of looks like this, right? And some people go, aha, there's some gamma and there's, oh, these are areas of interest. The thing is if you went in and bought QQQ, let's say this is QQQ. Nice. You went and bought QQQ 700 calls and you bought 14 million of those things, you would have something that looks like this that expired today. You bought so many of them, the heat map is adjusted and everybody's looking at that right there. But the probability of that expiring in the money is practically zero. There's no way the QQQ will move that much. See why I don't buy this shit? I told you guys, not long from here. I type in the Discord. Whew. I'm trying to look if I fat fingered and left any of these positions open. I didn't. MHP breaks. Don't play that game. Sit out for the rest of the day. Sit out day today. I love when I love, dude, it's like, I'm like play-by-play. I'm like an announcer. You guys remember, just making sure. No, I'm a guy pretty soon. I'm not buying bulls on bottom QQQ. Not buying it. Not buying it. MHP break. Don't fucking do anything. I'm not doing anything. MHP break is sit out, sit out, sit out, sit out. Buy bottom. Possibly, but a very small position on NQ bottom. Small. Or a scalp. If there's anything at all. Remember, irrational market is going to be choppy and overshoot. So there's a tiny little scalp inside of here. That's it. No reversal play. VIX hedge break number 2. You got 2 rational signals. MHP. Remember, MHP break. I don't play the game. There are some people who love always buying this under all conditions with a very teeny tiny position. I love when a plan comes together. I know, like, there's so many awesome plans on the screen. Careful for overshoots, okay? 8% of days we close below the band. Micros for me, dude, if I touch it. There you go. Micros. Let's go. Micros only. There is no profit target, though. That's the problem. Look, micros. Look how quick it goes. Micros. No big anything. There's no profit target. Bear zone bounce. Just retrace half. That's all it is right here. So literally retrace half. That's it. Right at the bear zone. That's it. God, man, like all of my so many different things. Anyways, what I was saying about gamma exposure, if you were to buy something ridiculously stupid like this, you would tilt the model. It would bias towards your position. So what we do that's different is we filter out your nonsense trades like that. If you buy 10, 14 million, 700 calls on QQQ that expire today, they don't filter in our model. Our model filters that out. So what our model does is it looks at only options that will be hedged. And that's the trick. That's how our stuff is actionable. So we know the probability at which your option will be hedged. We know if your option will be hedged based on action around it. We have a very sophisticated model that filters out all the options trades into only the ones that matter that are likely to be hedged on. That's how we can predict volume flow, which means every one of our pivots that you touch is predictable high volume spike 100% of the time. And we are never wrong. Never wrong. Every time you touch monthly hedge pressure, there's volume. Every time you touch lower DD band, there's volume. Each one of these pivot points is guaranteed volume. The only indicator set period that you need as a trader is just to identify where other traders can be. Like I said, micros. Micros. This is a dumb trade to long here on MHP breaks. I'm trading very small. And it's likely to overshoot. Lose $100 no big. Garrett says probability of breaking MHP after opening above is 9.3%. Probably is opening and closing above MHP is 89.3%. Garrett, what's the probability? See just micro. See how quickly that gets nasty? Nasty. That's it. I only touch it with micros. My risk is low. So Garrett, what's the probability that on MHP break bull zone bottom holds? That's what I need. So on MHP break, so like an example is, I don't pretend that, see, micros only. My next pivot is off of here, back up to DD band. Now the trade is here. Micros, we don't bet on this. All right, ready? Let's hit it with a few more micros. We're on MHP. Risky. But oh well. This is just eval. Just demonstrating. The trade only goes back up to here now. Back at DD band tap. Just right here. Let's go, baby. So Garrett, whenever MHP breaks, what's the probability that the bull zone below it still holds? That's the question I have. Nasty day today. On MHP break. So there's a different stat because it's such a rare case. Garrett will have the numbers. Yeah, I'm gonna close that out. Do that. How nuts that is. Yeah. That is nuts today. This is a future scout. This is dangerous, though. Right here. There. Stats on this, 8% of the time we close below, 88% of the time we close above. That's normal stats. That is crazy fucking day. Crazy. Look how crazy and nasty that is. It's VIX expiration. Yeah. Little flush there. Actually, monthly hedge pressure is there. That's nuts. It's gonna try to fight the hold. It's definitely just a VIX flush. It's gonna fight the hold, I think. Ooh. That's too quick of a move to not retrace a little bit. I'm gonna sit back and watch the fireworks on this one. Oh yeah. Just a pre-VIX expiration VIX flush. That's crazy. Crazy. This fucking market, dude. Look how crazy and nasty this is. We didn't touch that bull zone bottom, did we? Stick out. Stay out. Oh, look at these candles. That's nuts. That's so gross looking. Wow. You don't touch it. It's in the bots section of the Discord. That's nuts. What a crazy day today. It doesn't matter if resilience is positive or negative, right? You guys have to stop thinking of resilience as an indicator that matters anywhere but this box. And I try to train you guys for years on this. And reses only matter whenever S&P is in that box or trading against it. Down here, you don't listen to it. Don't use it. Don't even consider it. The index is flushing on its own accord, and it's going to do so despite what the stocks are doing. It has its own motivations today. So sometimes the index will trade much faster than the stocks, and that's what you're seeing. How crazy fucking nuts that is today. MHP tap right here on Nasdaq. So as Garrett had said, 9.3% of the time we close below monthly hedge pressure. We basically have like both of them next to each other. So we're about right there. Crazy, crazy, crazy. I think it bounces and goes right up to here to kiss. On the break, I'd be willing to long it again. Remember, resilience is only a tiebreaker inside of this box. You have to be very careful on that one. What a crazy day today. Too violent, man. Such a violent trade here. That's so crazy. What is resilience? So resilience is an aggregate of the stocks fluxing through like their redistribution zone, which is basically the gap. The stocks go up and down. We use an imbalance to understand if the stocks are going to flux up or flux down. So like Nasdaq resilience is less than 0 inside of this box. It's more likely to fill the gap that way. That makes any sense. So resilience is basically telling you when I'm trading QQQ, I can look at what the sum of the stocks are doing, Steven, and it'll give me some insight as what the stocks are doing. Like it's such a powerful tool. And since we're way below it, it doesn't apply anymore, but inside that box, it helps you make a decision. Let's go. I'm going to long these evals on this break. Come on, baby. Come on. Come on. Come on, break. Break. Dancing. Come on, this key's like taking forever to load up. Oh wait, hold on. There it is. It's gonna come back to the fair value gap for balance equilibrium of the range. It will, yeah. This is gonna balance right inside of here. Our stats have 87% chance that we close above exactly where we are right now. 87%. And our resident statistician with our backtest numbers coming hot with those. It's gonna fight right here. It's not gonna be an easy break, but it will. I agree with you, Steven. It's not a fine. This is just, well, that's because this is a VIX thing, right? This is a VIX expiration mechanic, so you nailed it. 100% nailed it. You're gonna see a lot of volume because the volatility is high. Something funky is going on. My QQQ is not loading up. What else? Here, that's a trade. 80.7% of the time, close above this orange line that I drew. 93% of the time, 9.3% of the time, that's a point. We're here. 88% of the time, it goes up here. 8% of the time, it goes down here. These are actual stats. This is what we teach you in our courses. What do I have left to do right now? Wait, what is this one? I'm longing all my evals right now. I'm gonna knock him out on this move up. I'm longing. Evals only. I'm just gonna populate them all. Let's pass them. All right. Let's. One passed, two passed, 3 passed. Let's go. 4 passed. 5 passed. I'm just longing. Just pass evals. I just passed 5 evals from scratch. Brand new accounts. Come on. Come on. Yeah, this is evals. I'm not doing anything on the real account now. This is all evals. I'm just gonna pass evals. Each if I had a sale, I'm gonna get 20 of them. See if I can get 20 of them while I'm sitting here. Hold on. High probability setup that despite hedge push or break. These are the actual stats. I passed 7 evals already. I'm trying to get my 8th one. I just pass. Yeah, they're all statics. One, 2, 3, 4, 5, 6, 7. Yeah. I'll convert them all to elites while they're cheap. I'll sit on them while they're funded, and I mean while they're evals, and then just convert them to elites. Come on, one more. A little VIX flush there. That's crazy. Let me put the DOM on the screen of one of them. This one's close to passing. Come on, baby. My entry on this one was shit, though. We're betting again. It's a high probability bet right here that we bounce and hold right here. If we lose this, then it's over, and let's be done for it. It's not volume that's going to reverse it. It's just volatility, liquidity. There's not selling volume into this. This is just a liquidity thing. This one was like slow, so close to the edge. So close to passing. So that was kind of the thing on that one. Super close, right on the edge. All right, I'm going to be right back. I got to go to the bathroom. Don't go anywhere. Went to the bathroom. My hair all crazy today. I need to get a haircut. Maybe a quickie sandwich. I was getting hungry. It's like the most basic shit. I just grabbed some bread and a piece of cheese. It's a crazy fucking day. These are probabilities here. Let's find out where this actually is. Relatively speaking, oh, it's actually right here. This is it. I'll save this graphic for you guys. Our setups have very high probability. Well, not all of them do, but some of them do. And the ones that have highest probability, we focus on. Actually, let me draw the word MHP here. So we're able to identify some conditions that have high probability. And these statistics were produced independently. Wait, 89.7? Wait, sorry. 89.3. Where'd I get 80.7 from? Listen to me. I'm like staring at this like, what the heck am I trying to say here? 90%. 90.3. Where the hell did I get 80.7? Don't listen to anything I'm saying. About to give up all the gains on this one eval account here. VIX, volatility should have no effect, theoretically, on these percentages. Because volatility is just a lack of liquidity, and so volatility is likelihood, like higher volatility is likelihood you're going to overshoot before it returns. I should have hold it heavily. Like this could overshoot before it happens. Like this is just an eval account. I was like way up on the edge. Now I just give back all the gains on it. Just trying to pass the evals. No fun on this one. Crazy volatile days like this normally sit out. I was up $2,000 on this one. Now I'm down $2,000 on this one. This one was up like 2,000 something. This one's still up 500 or 600 for the day, even though it's down 1,600 on this one. Try. Stop eating. You're bringing eggs. Where my eggies? I heard some shuffling around in the kitchen. I will have eggs delivered to me. That's amazing. It's about that time to go in a little bit. So, 88% of the time you close inside the DD bands when you open inside of it. Well, you always open inside of it, I mean. For the most part. 8% chance you stay below. 90% chance you hold this orange line. Lots of good scalp opportunities with the micros here. Maybe eggs don't eat the sandwich. Okay. I've been instructed to not eat my makeshift cheese sandwich. I actually need to eat something because my stomach was getting a little... Oh, hell. Now this is going negative. I was up $2,000 on this one. I was risking this one. Risk it for the biscuit. This one was effectively up 2,300. And I just threw two... It's volatile. I threw 2 micros for the chance it will be right up here. It's got plenty of fat on it. Like I said, it's up high enough to where I don't care about this one even if it keeps going. Yeah, eye doc turned into the egg doc. Egg doc talk. She started making these eggs, man, that were like, you know when you get ramen and you get those like soy eggs that are slightly cooked with slightly runny on the inside? She made like a whole vat full of these things. Oh, they're so... Hey, Pixel Cal says, should your stop loss on DD or how much below DD? What do you mean? You trying to long or short? Hello, back there. Camera's on. Oh, you brought eggs? You can bring it in if you want. Oh. Not wearing pants or something. You don't want to walk in here. Hold on, ready? Thank you. She like, stop eating that garbage. I'm gonna bring you some eggs. She watching the stream. I run upstairs and fix, because I drank a lot of coffee and my stomach was all like I have like hypersensitivity to caffeine now, which means I get really high on a cup of coffee. I'm not gonna lie. I get high on coffee now. When I was younger, you guys would watch me earlier in the stream like years ago. I would slam like 2 or 3 Celsius the whole time, and you guys were like, Matt, we're worried about your health. Don't do that shit. Now I'm all like super fitnessy, fitness diet, eat light. Getting my blood pressure under control and everything. Now it's like I take a sip of coffee and I'm like tweaking. It's crazy. I'm a coffee fiend. So now, like, I had 1 cup of coffee and my stomach's all like... So, I was like, I'm gonna eat something. She's watching the stream. She's like, don't eat that. I'll bring you some eggs. What a nice gesture. You're longing, Matt? You're longing where? Are you longing at the MHP break? So basically, the trade that I'm taking is MHP. Oh, you can't see. I'm like literally pointing at the screen. I'm like, can you see what I'm doing here? Sorry. MHP with overshoot. To DD band. That's it. Dude, Garrett, I've been seeing ads for that mushroom coffee stuff. You can call it like dirt or something like that. Or mud. Something along the lines of that. It's called like dirt, mud, something along the lines of a word that means dirt. It's mushroom coffee. It's got like lion's mane and I don't know the names of it, but all the different head health mushrooms. By far, it's one of the most prized possessions of things I own. I'll let you guys know. If you don't have like a Yeti or whatever, like a bottle that keeps water cold, they have ice cold water to drink all the time. I don't know if ice water is the thing where you guys live. In Texas, ice water is like it. It's so hot all the time. I actually go places where they don't have ice water, even in the States. They're like, they think it's weird. Rice is always cold. Like, you get ice water down here all the time. So anyways, having ice cold water next to me all the time is like a rare treat in life. Rise, is that what it is? Pixel count. We are at DD right now. Are you talking about S&P? Well, you have to tell me what symbol you're looking at. Oh, I see. I see. Okay, but look, S&P is broken monthly hedge pressure, right? So any bet that I'm taking down here is a small bet anyways. Don't look at these. Just look at this. So if I were to long here on the S&P, it's always a 10-point stop. But note that we're in a situation where it's irrational. A lot of times it can overshoot, which sucks. And then come back in here. So if the first trade doesn't work, when I stop out, I'll take it again if it breaks and reclaims. I'll take a small position only on the edge. The 10-point stop. And when it gets there again, I'll take a small positioning. And there's enough room on this. This is like 16 points of run to risk taking the trade twice. So yeah, but the thing is that you have that MHP resistance down here. So the trade is basically sandwiched between these two. So he's asking me what I would do if I were taking that particular setup. To me, the love of the days all goes to Nasdaq. Nasdaq's got the juice on it. S&P's rather muted. As Simon is saying, position size is so important. Yeah, that's why, like, so now you know why when it's irrational, you trade small, because it could fail once and fail again, and the third time it takes off. So it's like each time you hit those levels and you know that it's possible to overshoot, right? That's why you trade small. That you can stage in a second trade or a third trade. That way, if you fail the first couple, you don't lose a lot, right? That's the whole point. Just nailed it. You guys say mushroom coffee so good. Here's the thing, like, I love the flavor of mushrooms. I don't eat mushrooms. It's like my remnants of my days delivering pizzas in college. I had a bad experience with a pizza. So if you guys remember, when I went to chemical engineering school, but while in school, I had 3 jobs in college. One, I taught classes at University of Houston. I taught fluid dynamics and material science and engineering, materials class. That was a side gig. Number 2 is I did research for the head of the department in catalysis, so reaction economics and optimization of catalytic component of a diesel engine catalytic converter, which we were a part of the team that designed all the things on the inside of that. There's a huge global effort to do that in the early 2000s. Now they're in every truck. And then I delivered pizzas at Domino's. That's the real money that I made in college. I've been spending cash as an assistant manager at the time. And then I went to engineering school, and I was also doing some biology classes at the same time. I had a dual focus. So I was a busy boy. But also didn't have a lot of money as a poor kid. So, you know, I'd eat free pizza whenever I could find it. And, you know, we used to find pizzas, like old pizzas laying around all the time. One time I had a bad experience. You know, pizza that had mushrooms on it. It was one of those ones where you found it and it was like underneath some towels and shit. And you're like, oh, how long has this been sitting here? And you're like, whatever. Whatever. I'll eat it. And it didn't, not to gross you guys out right now, but it didn't turn out so well. Yeah, that story didn't end too well. So it took me many years to be able to like taste a mushroom again before I, you know, but eating them, my body just, this is like this cringe reaction of like, ooh. The foraging college student. Yeah, I found random mushrooms behind the fucking washing machine. Domino's in the back underneath some dirty aprons and towels, you know. Ooh, look, I found some food right here. Anyways. That's actually like the most fun job I think I've ever had in my life. This is more fun than my engineering jobs. Just fuck around, make pizzas, deliver pizzas. It was good. From age like maybe 19 to like 22 or something like that, I did that. At that time, in the early 2000s, I was making $2 to $3 grand a month, which was not bad for a salary. I was working almost every day in some capacity. I was working every day, but in some capacity between the 3 jobs. So I was working almost every day, period. At the pizza place. Come to the stream for Matt's stories. It's funny, if I go get my organic chemistry book, I showed iDoc Talk the other day. On the edges of all of my textbooks, there's like pizza sauce stains because I would have them like open. Here's a book. This is Mary Shelley's Frankenstein, one of the best novels written ever. Anyways, I'd have the book like open like right here, like literally like right here, and I'd be like studying while I'm scooping pizzas, and then order up, and I'd be like, okay, turn the page. Okay. They were studying synthesis of alcohols. Okay, this is organic chemistry. As always, remember, I have my textbooks. I would be reading them while I was working. So, you know, in between, pizzas would come to the oven, and on non-busy nights, you'd have a pizza, and then maybe like 30 seconds, another pizza. I can read a paragraph in that 30 seconds. So I was like utilizing my time that way. You know, with like the extra money, I was helping, you know, my brother was going to school too. He had a scholarship to play baseball, but like neither one of us had a lot of money, and my mom was working 2 jobs to help, you know, make do. So my brother and I both worked to help my mom out, basically, and have some spending money in college because, you know. Not much. It said some pretty bad food poisoning from mushrooms. Ever since then, I couldn't eat mushrooms, but like mushroom coffee is mushroom powder, so it's not going to be like the texture of it. But it's one of my favorite flavors. I love mushroom flavor. Long story. 90.3% chance we hold above this 20 whatever level this is. Rich got that bounce back to 3,700. Nice. Over here, don't forget, we'd love for you guys to sign up for our webinar series. We'll keep going on this. God, this account is just dancing around. It's up 1,000 for the day. I need to get it over the limit so I can consider it a pass. Nasdaq just moves too quick for comfort, man. My real accounts love the S&P. Call me a boomer, but I don't like to trade the Nasdaq unless I'm very sure on it because it moves too quick. Too quick. Brian says, can't believe I taught thermo. That's awesome. I didn't teach thermo. I taught fluid dynamics, which thermo is related to heat transfer, heat engines, things like that. Fluid dynamics is the transport phenomenon of fluids moving. So like water in a pipe or air going over an airplane wing. It's basically what you're studying. So half of that class is studying Navier-Stokes fluid flow equations on how fluids move over surfaces and through a pipe. And the other half of the class is Bernoulli's equation. Airplane lift and materials was cool. Material science engineering is a scholarship program that allowed one of the highest grade upperclassmen to teach a supplemental class to the real class that the professor taught for additional credit hours. So it was a 1 credit hour class. Like the real professor taught, I wasn't a professor, so they taught the actual class. So the student would go to the actual class and then come to my class after that. So he would take the same class twice. Like my goal was to help them solve the problems. So the professor's just like teaching the concept. My goal is like, here's how you solve the problems. And it actually counted for 1 whole credit hour. So it was a legit class. And essentially we would go over like old tests and how to actually solve the problems. It was like a glorified study hall, but I also would teach the concepts too. Because a lot of people didn't understand the concepts, so I had a way of trying to teach the concepts to make them easier. It sounds like what I do right now. I loved it. I loved teaching. It was a huge part of my call, and I actually took a lot of pride in it because, you know, the goal was to have your students make a better letter grade in the real class because that counted towards their engineering GPA. My class counted towards their overall GPA. I gave everybody an A as long as they did their homework. I had rules. If you did your homework, you got an A. I assigned problems, you did them, you got an A. Easy A. But you had to do it. Right? And so we would study the different problems and how they work. But it was fun. Materials was a cool class because it was studying like the properties of solids, basically. So like steel, how steel is made, crystallization curves, carbon nanotubes. We study like a lot of physical properties of solids. Atoms organize themselves in a crystal, that kind of stuff. You like trading micros with Nasdaq because it moves so quick, minis with ES. Yeah, micros on Nasdaq is the way to go, dude. Nasdaq is just too spastic. With 2 weeks option selling wheel strategy work with Rocket Scooter, I don't really know what the wheel strategy is. Honestly, I hear about it. I don't even know what it does. I'm not going to lie and pretend I do. I hear people talk about it. All right, so I need some help. This is the most important thing. I have this trick I do every year. Let me show you guys something. I'm the best pumpkin carver you've ever known in your entire life. I'm great at carving pumpkins. I'm going to show you something. I don't have a lot of evidence of this claim of mine. I have a little bit of evidence of this claim of mine. I will show you what I'm talking about. I need your help. On login Facebook. I need your help. Go over here and let me show you guys something. I need your help with that with a very important question. I'm a pumpkin carving master. Tall claim, I know. Let me see if I can't prove it. I need you to help me decide what my photo is going to be this year for, or my pumpkin carving is going to be of. I'll let you guys pick something. At least I can find a picture. So the only evidence I have of my pumpkin carving greatness, the only evidence, I do memes. So give me a meme, go to Discord and maybe post it. I do memes and I will carve the meme into my pumpkin. But it's not just any carving. It's 3-dimensional. And this is my one that the only one I have a photo of because when I did this was the day before smartphones, like back in the day. As you can see, I get the Hey Girl Gosling. Let's go. That's my actual pumpkin carving. So, question is what should I do this year? See how there's layers? There's layers to the carving. There's shadows and layers. All right. I thought about doing iDoc Talk. Doing one of her. So I have this way that I get a photo and I go to Photoshop and I make it gradient. And I carve it out. So the one piece of evidence is a Ryan Gosling. What is relevant for pumpkin carving this year? Maybe it can be a trading meme. What do you guys think? Gary says, do I think Black-Scholes has a fundamental error because his principle is based on doesn't count the fluid, only the movement? You mean Navier-Stokes? Did I say Black-Scholes earlier instead of Navier-Stokes? Did I confuse myself? I I say Black Scholes so much. Oh, we're losing MHP. Just curious what I think. Do you think Black Scholes has a fundamental error? As the principles it's based on don't take into account the fluid, only the movement. Explain. You're trying to, since it's based on differential equations that are similar to fluid movement models. You're asking about options. Fundamental error based on just comparing Black Scholes to something similar like Navier Stokes. They're very similar. Let me look at something real quick. Good question. I need to review something really quick about math here. Because the Navier Stokes, or not even Navier Stokes, the Black Scholes themselves have the very similar to like momentum diffusivity models, right? This is like momentum transport phenomenon. And I'd like to review the math to see what it is, because some of them, if they take like a the approach is the equations, the differential equations are similar. Do I think there's a fundamental error? So like you're saying it doesn't take into account like intrinsic properties of the fluid? Is that what you're trying to say? Or trying to, I guess, ask about? Never thought of it that way. Talking about like, just because it takes into account you've been interested in this because the premise is that based on what the observed movements were random, but maybe there's just something we had not yet discovered. The observed movements in the market are random. That 100%. Well, let's start. So in the Eulerian sense, the bulk fluid is containing Brownian motion inside of it. So the individual particles or individual trades are random. Now, there are portions of that distribution, like if you like water in a pipe, right? You know that there's like a no-slip condition at the boundary. You take that into account. And so it's predictable that each particle, like if you, let me draw this thing here. Get a fluid flowing through a pipe, right? And that it looks like this, right? This is what the fluid, this is the velocity curve, right? It's faster in the middle and slower on the edge. If you were to pluck individual particles from this particle that's in the middle is it's gonna be harder to predict how fast it's particularly going, even though the bulk fluid looks like this, than one on the edge. Because one on the edge, you can predict it's not moving. So it's 100% probability you can predict it's not moving. So basically what you're saying is inside of here is that individual particles inside of the fluid are going to be moving randomly. The probability of what it's doing in a bulk sense is known. And so the stock market's the same thing, is that it contains like predictable portions and unpredictable portions. The bulk of the stock market is predictable to a degree that it always goes up, but the individual trades inside of it are not. They're 100% random. It's based on so many phenomenon. At the end of the day, the randomness comes from this very fact. It doesn't matter how much money you've lost in your trading account. You, If I'm trading against you, I have no visibility of your ability to refund that trading account to keep going. Because of that, that one fact, the stock market is 100% random. Let me say that again. When you have a margin call, it doesn't matter how much you've lost. Me on the other side of the trade would assume, they got to close out their position and I win. But I don't know your capacity to keep funding it, to keep going. Because I can't see beyond the veil of your risk, your exposure, and your capabilities. Therefore, your behavior is 100% unpredictable, and there's so many variables I'll never know. Even if you had the money to cover it, I don't know the choice you'd make. And you can even bluff me on the choice you'd make. So because of that, no trader can predict the behavior of the trader on the other side of their trade. But in a sense, we can predict where the majority of traders will likely to behave at certain boundary conditions, which is kind of what you do with Navier-Stokes and other equations that try to model fluid flow, right? You look at the edge right here and the edge right here. At these boundary conditions, I can predict with high probability that you will have traders behaving there, because in a bulk sense, the majority of traders need to behave there, although I can't predict which ones will because of their capabilities and their desires and their risk and their exposure. But I can predict that a lot of people will behave there. Now, because it's random, I can't predict the sum of what everyone's going to do, if they're going to be longing or shorting harder than what the bid and ask or liquidity is capable of providing. So I don't... Black-Scholes... I'm still trying to wrap my head around the idea that it doesn't take into account the fluid itself. Just because it's a generic math equation that doesn't take into account the company itself and fundamentals, and there are other intrinsic properties that Black-Scholes is ignoring. It's basically what you're saying, right? Y'all realize this goes from me talking about Domino's Pizza to some heavier math stuff. Everyone tunes in for the math hour with Matt. What you're basically saying is that because Black-Scholes is purely a math equation, right? And it doesn't take into account intrinsic properties of the stock. Like should the stock be priced differently because of XYZ related to Apple or XYZ related to SPY? Black-Scholes is just trying to provide a probability that there's a 50% chance the buyer and seller each have to win when the price of the option is pegged against the risk-free rate. So its attempt is to neutralize the probability that every option is effectively a coin flip and is priced as so. So it's priced in a way that no option, or theoretically no option, nobody should have a higher probability than the other side of the trade if it's accurately working. There's a couple of videos on that phenomenon, but essentially that's what Black-Scholes is aiming to do. And when the probability is equal that you're going to win, you're going to lose, then the liquidity is maximized. And the idea is to price options as such that the liquidity of them is maximized. If something has a 60% chance of winning and a 30% chance of losing, the majority of people will trade to one side. They'll have a supply imbalance, right? A demand imbalance. And that becomes illiquidity, and then the market dries up and prices are not stable. If it's a 50% chance to be on one side or the other, or the 50% chance that there's value at the end of the day, well, that's the international sign for time to close the stream down. I exhaust all of my RAM with the bajillion windows I have open. I don't know. I've never thought of it. Maybe you can detail what other things you think about, what other properties would correct Black-Scholes to have like more of a... There have been some adaptations of the method. That others have employed. Where's MHP? It is right here. You're trying to hold it. I'm still up 1,000 on this one. Should I just hold it? See what happens. It's trying to reclaim monthly hedge, but it's just not making it. It's not liking that. What a crazy market today. So I have 6 evals passed. This is the 7th. I'm just hanging on to try to get it passed. It was like right at the edge. I was holding on to it to try to make some magic happen. Options and wheel strategy. Just need to look that up. It's a systematic methodological approach to options trading and combines selling puts and calls to generate income while essentially owning the underlying stocks. How does it work? This is like, just give me a quick and dirty long blog post. Quick and dirty. I've never actually dove into this, so let's try to figure it out while we're here. Passive investing allows investors to generate consistent income. It's perfect. I hate when people say that. There's no generating consistent income in options. But let's see, let's dive into it. Selling a cash secured put option. Selling a covered call if assigned the stock. Essentially, let's start at line 2. When you sell a covered call if assigned a stock, then basically you're dumping any stock that you're forced to buy. Selling a put option. Buyer can dump the shares onto you. You have cash to secure it. And then you sell a call to dump the stock back off. That's what this is telling you, okay? So essentially, you have a machine that can take the shares and get rid of the shares and take the shares and get rid of the shares. And you're selling options such that if you're assigned, I'm just assuming, if you're assigned this position, you can immediately get out of it. You have your cash secured at this point. I'm just guessing. Let me read this. Selling the short option is a credit, yada yada yada. So you're making money on these credits. Selling cash securities assures enough capital is available to take assignment if needed. Yep, that was my assumption. Okay. However, if you're not assigned, you can continue selling puts and collecting premium. So yeah, what happens to this strategy if you run out of cash to take the assignment? That's my big question. Is that a failure point? You must have a lot of cash sitting there, not invested, to have this assignment wheel keep churning, right? Is that how this works? Am I getting this right, you guys? Cover calls can be sold repeatedly until the net stock cost base is below the current share price. Ideally, the price, blah, 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 blah. Short call expires out of the money. You're selling out of the money calls. Bet the market goes up slowly. Let's keep the entire premium selling out of the calls for next expiration. So you sell a put, market falls below, you're assigned a position. So somebody sells it to you, you collect the shares, you hold the shares, and you sell covered calls. So your cash secured becomes share secured. You sell calls until the call option is assigned, and that person buys back the shares from you, or you choose to sell the stock profit. Or to sell the stock in general. If you're assigned the shares of stock because you sold a put and somebody dumped on you, you want the stock price to increase long term. So basically, you're just collecting premium, selling out of the money options, and occasionally be dumped a position. But what happens if you've sold a call and the calls go in the money, and somebody forces you to shorten a bull market? How do you handle that? You have to dump the shares, I guess. Why do people do this? I'm still not trying to, I can't wrap my head around the benefit of this. Let's look at an example, like why people do this. Here's an example. Okay. You can sell the short put. I hate when people sell the short. You can short a put at any strike price. So market's going up, you're selling puts to make money. Makes sense. But in this case, you're naked and you're cash secured in case the market forces you to, or the trader forces you to assign, or forces assignment onto you. So if the stock keeps going up, you're just cashing out, selling puts against the cash you own. You can roll the short put forward. Maybe that's where the wheel comes from. So essentially, you just keep pushing it further and further out in time. I don't think this is going to work today. I'm back to break even on this guy. I'm at 300 bucks, 400 bucks, something like that. Okay. But this is going to be like 6,000, 7,000. It goes where it needs to go. Stock is below the strike price. You'll be assigned the shares. Yada yada. Okay, so you're just selling puts and you have the cash to take the assignment. All right. Once you're assigned the stock, you then sell covered calls because you have the shares against it. You're alternating back and forth. Oh, okay. So essentially, with this kind of strategy, it just looks like it's a simple way. My brain is not wrapping my head around why people would do that. Well, right. Well, you have when you're not, you have the cash to secure the puts, you have the shares to secure the calls. So essentially, you're just converting your money to shares to cash, to shares to cash. So whatever position you take, you're just rolling into selling against it on the other side, collecting premium. And all of this is taxed as short-term capital gains, probably because you're rolling quickly within the year. At some points, you're selling, you have cash secured, you're selling naked puts. And what happens if the market crashes on that leg of you? You just basically lose money on your trading account. Right? So it seems to just be a strategy where you can alternate. You're not having to trade your shares, basically. That's what is that correct? Am I getting it right, Pixel? So essentially, you're like allowing the options to choose if you trade your shares. If you're thrown into a position, then you're hedging it on the other side by selling premium or collecting premium by selling option against it. So whatever side of the trade you're forced on, you take it because you have the cash to do so. This is making me sad. Come on. So what you're saying is, with 2 weeks option selling wheels strategy works. See, I haven't really wrapped my head around the timing of that. On the period of 2 weeks is actually benefiting it or not. I gotta sit there and actually think about that because I still can't wrap my head around how that's benefiting. Why go back and forth against it instead of just taking the long side of the market and selling puts against it? Why not buy shares of the market? Or not selling puts. Why not buy shares in the market and then sell out of the money calls? And that's, I mean, markets only inch up. Like if I were to do any kind of option strategy, I would buy shares to collect dividend. I take the dividend that I've collected and take that as profit. I take that profit and buy puts if I need to. Like the market gives me wonky signals, like hedging puts. And to continuously fund the puts from the dividend I receive, I would sell out of the money calls in a period of like multiple risk intervals above on weekly so it don't expire. So like essentially, like I wouldn't rotate back and forth between long side, short side of market like that, because the majority of trading days are green, and the majority of months are green. The overwhelming majority, 70% of trading months are green. So on a monthly basis, I wouldn't want to be on the short side of the market. If I'm selling puts and somebody assigns me a short position, I might be stuck in a short position and having to like rapidly sell calls when the market's going to be bullish at some point anyways. I'd rather be buying calls rather than selling calls to collect premium on or selling puts, sorry. So like if you own the shares, you sell the calls to somebody can buy them back from you. I don't know if I'm reading this wrong. I just don't. It seems like you're alternating long side, short side, and then you're hedging the other side with it, so that somebody can take the shares off your hands and collecting premium. It feels like one of the, again, I don't know if this is the right or wrong assessment of this, but it feels like what I like to call the picking up pennies in front of a steamroller trade, which is like, it seems to be like a good idea. Oh, there's a penny. Oh, there's a penny. Oh, there's a steamroller coming. Oh, there's a penny. Okay, I'll take a few more. And then when the steamroller rolls over you, you knock out a month of work. Now, again, I don't know, Pixel. You have to tell me what you think, because I haven't analyzed the whole strategy. Selling premium is like making a little bit of money every day on your 100 shares. But what happens if you're on a leg of the trade where you're assigned a position and it way goes against you? The steamroller knocks you over. You're still selling options against it, but your premium's only putting drops in the bucket, where the steamroller knocks a hole in the side of it. Does that happen? Because the trade doesn't seem like it's ever hedged. It's exposed. Like you have cash and you're selling puts. Well, that's an exposure, right? Yeah, like 15% below the market. Yeah, you sell way out of the money. You're never going to strike in the money, and therefore you're just collecting pennies, which is good, right? It's not a bad idea. So what you're saying is if you get assigned, you sell another 15 put and cover call above the average price. Yeah. Has there ever been an opportunity where you've had exposure to one side of the market and it's gone against you really quickly and you weren't assigned a position and then you lost your cash to be able to secure the option you sold? That's my, again, I've never thought of that. You're challenging me with a complex, like my brain is like wrapping its head around. But my first thought is, what happens if you lose the cash to secure the put that you sold because you took a big hit? And therefore you're forced to be assigned a trade that you can't cover. You really tried it? Okay, yeah. I get skeptical. By the way, Marquise, current BV level right now is... Oh, I don't have Thinkorswim open. I don't know, but go to the Discord and we put it there. And there will be a new one tonight, by the way. Yeah, for you, bud. Hold on. So tonight at Market Open, we'll have another one. It changes today. There'll be changes today. Extra references. Put this like up here. That's here. I don't have it in front of me. Screw this. Here I am, was just trying to... Now I'm actually down $300. I went up like 2,000 something. I'm trying to bet that we end up here. And again, it's just eval, so I might just hang on to it and see what happens. Tonight we get another triple V. I've never really been in that particular risk of having that. But anyways, I got to get out of here, you guys. We stream like an extra hour here. Don't forget, check out Rocket Scooter. Sign up. You guys like to draw on your charts, draw out a trade plan before it happens. That's what we're here for. We try to teach you how to do this as a trader so that you can have statistical probabilities in front of your face. Statistics are everything in the sense of when you're trying to do any kind of trade in the random market. Statistics help you with your confluence. Don't try to use technical indicators for confluence. That's never worked. It's about time you realize that. I don't know how many years you struggled with trying to line up the perfect recipe of indicators. They've never really been anything more than a coin flip. Well, now statistics are great. 90.3% chance in the history of days we've closed above X level. 8% chance we've closed below Y level. And so these are odds, and I use odds to throttle how big or how small I like to bet. And that, to me, is the only thing I can control is how big I bet. Right? So make sure in our classes we teach you the statistics and odds of certain things, high probability setups with actual backtest numbers with them. Our highest probability setups are 90% chance of certain things. Our average good ones are 70% chance. So statistically sound. It's a complete accurate statement. You can see for yourself. We give you all the data. Check it out. The very simple class series of 20 courses called the 20 Days Profitability Mindset Masterclass. You can take it. You can learn all the stats of the best setups in the market that we teach and all about them. All right, we love you guys. What is VIXpiration again? The third Tuesday every month. VIXpiration is the third Wednesday of every month. And VIX options, monthly options expire in the morning before Wednesday. Barring a holiday that may shift that around, you have to go to the CBOE website to get the VIX options expiration calendar. Typically the third Wednesday of the month. So VIX futures roll over the Tuesday before the third Wednesday of the month, or the Tuesday before VIX options expire. It's not necessarily the third Tuesday of the month, because if the month starts on a Wednesday, the Tuesday before the third Wednesday is actually the second Tuesday. So you have to kind of look at the options calendar to see when these expirations are. But essentially,